Everyone knows not every trade will be profitable, but if your trade strategy is good over time, you'll be successful, right? Not necessarily, because you can't outrun losses. The markets have a nasty habit from time to time of dishing up very nasty losses onto unsuspecting traders to simply create results that may have taken months or years to achieve. How does this happen? One way is illiquidity in the markets. This can jeopardize even the largest of funds trading positions by moving prices to places very quickly where there are no buyers or sellers in the world, giving what's known as a price gap. We're going to talk about this with Lee Duffy from the UK. Also, I have a guest today. James DeVette is joining us from South Africa. James has been trading for over 20 years. His results speak for themselves. His trades have resulted in 188% profit over the last 11 months. So you can value his opinion. And you should definitely check out his YouTube channel, Arcis FX, ARCIS FX. So how you guys doing today?
I'm good, thanks.
Great.
James, thanks again for joining us. In the intro, we talked about illiquidity in the marketplace. Can you give us an example of something like that?
Yeah, sure. A really good example, actually. Quite recently, in September last year, the British pound collapsed through the floor. People thought it was approaching parity to the US dollar. What happened was the market dropped about 600 pips, which is about 0.6% in a matter of seconds. And during that period, the market literally gapped from one price to another with no trading in between. And as a result of that, many traders got stuck in long trade positions and were unable to get out of them. And as a result, lost a lot of money. And that's the sort of thing that can happen during extraordinary market moves, which often traps traders. These events don't happen very often, but when they do, they can be absolutely catastrophic.
So using something like MKTRedLine, does that benefit in that situation?
Yeah, so I remember this really, really well because it was a Sunday afternoon. Lee had actually messaged me saying that there was an off-the-chart reading on MKTRedLine, and I was actually long the pound along with most of the market. The pound had reached a really important support level, looked like it was holding, and Lee messaged me and said, I think there's trouble on the way. And I took the decision based on that to get out of my trade. I took a small loss, which could have resulted in an enormous loss eventually. Several hours later, as I watched this market collapse completely and destroy all sorts of people's funds. So that was a good example of how MKTRedLine was able to help me out of that situation.
Wow, yeah, that is a very good example. So in a case like that, is there a way to use some kind of information from MKTRedLine to make profits as well?
Yeah, sure. So MKTRedLine is pretty clear on when there's lots of money supply and money flow into the markets, liquidity available, and generally that's supportive of various instruments, including stock markets, things like crypto and Bitcoin. And when you see those indices drop or move to certain levels, you're able to quite securely take certain positions in the market, knowing and having a little bit of information that most people won't have access to. So definitely gives you an edge in the market.
What you're saying, James, is there's an interpretation skill that in terms of those specific instruments when they reach certain levels and the MKT Risk Index that you can learn that tells you what to do, what action to take at that time, right?
Yeah, so I'm no expert on it. You're the expert, Lee. So I go a lot on your guidance. But there's a learning curve for sure. But I think it's a bit of a process once you get to know how it works and start to be able to read the ebbs and the flows of the MKT Risk Index and the Ghost charts. It's definitely very, very helpful in the market. But at the moment, I rely a lot upon you to give me the direction and to interpret what those charts are saying. I think, though, anyone could learn how to do it.
What James does when red line spikes, often, even though it's at 100 and he shouldn't do it at all, he buys dollars, right?
Sure.
It's not the recommended manufacturer's recommended action. The recommended action is get out of the market or hedge. But he has done that on numerous occasions, haven't you, James?
I have done under your guidance again. I know that when the MKT index spikes, if there's going to be any trade in the market, it's probably long the dollar. It might be wiser to stay out of the market on certain occasions and during certain events, particularly certain news events or forthcoming events. But it seems to be a safe play if you're going to be trading and you want to be in the market to bet on the long side for the dollar.
So James, is there a strategy around like the relationship between different currencies that you generally follow?
Yes, I trade generally the major currencies, and the biggest ones of those are the euro, Japanese yen, and the British pound against the dollar. Although the euro and the yen make up the biggest portion of the dollar index, which is the basket of currencies which are traded against the dollar, often the euro and the yen are kind of the leaders, and they don't behave in the same way. Sometimes there are divergences and disparities between the direction of the euro against the dollar and the yen against the dollar. And if there is any directional disparity or divergence, I normally take the side in favor of the yen, and whatever the yen's doing, it tends to lead the other currencies. And when I use Ghost, I look at what the Ghost predictions are on the yen before I look at the other pairs, strangely enough, which might not be what other people tend to do.
Okay, and that brings us to MKT Ghost. So I know that you and Lee talk a lot. Lee's the expert on Ghost. It's still in its really pre-public beta stage. So you're one of the few people that see it along with Lee. And so you guys talk a lot about strategies at the beginning of the day a lot of times, right?
Yes, we're on WhatsApp and my own Telegram channel, Messenger, which is part of my service, but we have our private chat in there as well. And we're on there most of the day. And Lee will post up his MKT charts, and we'll talk about what the index is doing and what Ghost is saying about various currency pairs. And if I'm in doubt about direction on any particular currency pair, Lee's the guy I go to, and I say, what's Ghost saying? And if Ghost agrees with what I think, then it's all good. And normally, most of the time, almost every time, it's correct. If there's a difference between Ghost and me, often I just stand aside.
And that's interesting because what we said before is that you have to know what you're doing as far as a trader. You know, tools are only so good, but it is a very important thing to have certain insights. And it sounds like something like MKT Ghost gives you an edge that other people don't have.
Yeah, so I've been trading for, like I said earlier, about 22 years. One tends to get a little bit, I suppose there could be a tendency for arrogancy or the kind of know-it-all feeling about the way you go about your business. But not every trader knows everything. In fact, no traders know everything. And any edge that you can get in the market is invaluable, really. So I think and it was interesting that I came across Lee by chance because he was wondering about something in the markets. You might want to talk about it another time, Lee, regarding the Canadian dollar yen pair. And he consulted me on it. We both had a look at the markets, what my thoughts were, and what Ghost was saying. We came up with a plan, and we ended up in a big profit as a result of that collaboration. So as a trader, one can, after such a long time, one can tend to think that one knows almost everything, but any edge is completely, it's like gold. Absolutely.
On that CAD yen, I noticed that James, we made the plan together, as you said, and he scooped twice as many profits at twice half the risk that I did. I could see James's trading skills really sort of shine through on that. And it's interesting because we've been in a CAD yen trade today, haven't we, James? And that's done quite well for us.
Yeah, so we both had input into that trade. And in fact, we were completely spot on and in harmony with each other because Lee's MKT trade idea was exactly the same as mine. We were able to talk about it and share privately and then put it onto the public Telegram forum and promote the trade and publish the trade to our clients. So, and it worked out perfectly twice, in fact. We took the same trade twice on the same pair, make profits twice on the same move using Ghost and my own trading ideas. So it was fantastic.
So James, you said you were posting trades. Is on a Telegram channel? Is that what it is?
Yeah, so we have a Telegram channel I have a website called arcusfx.com aligned with my YouTube channel and my Twitter channel. And we have a membership option on the website where people can join my Telegram channel. And all of the posts, all the trades I take from my own personal accounts and my managed accounts, the copy trade accounts, get posted directly into the Telegram channel, straight out of my MT5 account by software. So every single trade that's posted in there is identical to the trades that I personally take on my copy trade accounts. And plus, I provide daily analysis and updates and insights into the market to members. So all of the information on that can be found on my website. And I also provide a copy trade service where people can, if they don't want to trade themselves, they can link their own trading accounts to my master trading account and have the trades copied directly onto their trading accounts. So they will receive exactly, whether it's by notification in the Telegram or by copy trading onto their own accounts, exactly the trades that I take using my analysis and the inputs from Ghost. Lee, talking about that liquidity gap on the pound,
Yep.
it was really interesting because there were an awful lot of people that lost huge amounts of money. In fact, you knew someone as well, didn't you?
Yeah, I was talking to a guy on the Monday, and he had just lost his broker had just closed him out, and he'd lost 300,000 from his trading account, and he was blaming the broker for not getting him out. He put the stops on and all this stuff, right? Now, for somebody who's trading such a large amount of money, he has to have been unaware that trader can't get you out of a trade if there is no buyers or sellers in the marketplace. It isn't the broker didn't do his job. He's making an assumption that there were buyers and sellers in the marketplace at the time. So he had nowhere to go. I mean, you can't blame the broker if that happens, right? If you're in the middle of it and it happens on you, you're toast, right? You're just going to lose a really big chunk because you're over leveraged and you don't really understand the risks that you're taking. And that, I wonder, is probably true of most people who are retail traders in the marketplace. They don't actually understand the risks that they're taking. What do you think, James?
Yeah, I agree. And sometimes not even the broker can get out of the position. So if they need to trigger a margin call on your account, and they've taken the opposite side of the trade, or if their dealership with the ECN market is in those trades, they can't get out of the trade. Some of the brokers actually lost quite a lot of money as well because they weren't able to exit the counter trades. We saw a similar thing that happened just the other day. In fact, for those of you who trade stock markets, NVIDIA, that went up by 32% in a couple of hours in aftermarket trading. A lot of the brokers and the dealers were closed after markets. That although it was an after hours, there wasn't really a liquidity gap. People were stuck in trades and unable to get out of them because their trading platforms weren't operable. But there were also huge liquidity gaps during that period. So, and that's a heavily traded stock. It's not a penny stock. I think they increased their market value by $300 billion overnight. Actually, not even overnight, in about an hour. So that's $300 billion that had to be found in an hour that just either evaporated or it got swallowed up somewhere. Incredible. So these events can happen, and they do happen. Almost never, but when they do, you're toast, basically, unless you know about it in advance.
I got a thing I've been saying lately is that, especially if you're a retiree or you're somebody who's been in the market for a long time, you've experienced one of these, at least one of these drops. Like you said, it doesn't happen often, but it does happen. I can go back a few years when there was a lot of talk about North Korea and a little bit of saber rattling between the U.S. and North Korea. And I remember I lost around $30,000 in one day in one of my my IRA account. And I keep thinking back that, at that moment, no one could do anything. Your phone's ringing to your broker. They're not answering. You can't get through. Nothing can happen. But I'm thinking if you had the ability to know something was coming up, like if you had something like MKTRedLine that warned you in advance and you could do something about that, then you really don't have a chance to after that. Once it starts happening, you're stuck.
Yeah, yeah. Well, that is so that event in September last year with the pound, the pound eventually dropped by about 3.5% in, I think, about an hour, probably 40 minutes. And when Lee got hold of me ahead of that event and said something drastic's about to happen, I was I was in quite a decent sized position. So, I had to take about a 2.5% loss on that trade, which for me is quite a lot on a single trade. And I didn't believe him initially. I thought, well, that's great. It's I've got thanks for the heads up. I'll go and have a bath and walk around the block a bit and think about it. And I wasn't intending on doing anything, but if I hadn't, it would have probably been a 30% loss on my account, which was quite a lot of money. And sure enough, it worked out. And I've never seen that happen. And I've been trading a long time. And the market's full of people nowadays that have been trading for 10 years or 5 years, let's say 25-year-olds and 30-year-olds, 35-year-olds who have never seen these sorts of things happen, who've never seen a market crash. They've never seen a stock like Nvidia gap up by 32% in 10 minutes. Have never seen inflation at 5% or 7% or 10% like it is in the UK. So for them, it's a foreign experience. It's a completely out of the box black swan type of event and unless you've seen it and experienced it before, you just don't think it can happen. You don't believe it. So, but they do happen. I said not very frequently, but it's actually more frequent than you would imagine. Every few years, maybe every year, maybe every 9 months, something dramatic happens in the market, wipes out half the retail traders' accounts.
It does happen, right? Because I've been trading for quite some time myself, and I remember the first big one that I got caught in was Euro Swiss. Yeah, that when they did the decoupling, and I was on the wrong side of that trade, and that wiped 20% of my account, and it was just a little fluffy trade with a very small size, and I still got wiped. And that's because it moved 30% in minutes. But that was my first bitter experience.
Yeah. And so how do you avoid these things? Well, before our tools, was there a way to avoid these kinds of things?
I don't know.
I don't think so.
No, I don't think anybody had. There's no tools anybody had. Nobody wheeled out a tool. Nobody told me, use the VIX, use this, use that. I didn't even know what the VIX was. And that's a lot of people. They go learn to trade, right? Somebody will show them how to trade. They think they know what they're doing. They're trading. They're making a bit of money. They get really confident. They start getting more money into the account and start really going for it. And then they get caught in something like this. But, if you don't have the complete tool set that you need, really, I think it's really quite risky. And I don't think people understand what that risk is.
And I like to pick on the VIX and everything because it's been around for so long and the technology hasn't really been updated. But even people within the VIX and everything, they don't claim that it's predictive. So it's going to tell you what its perceived level of risk is, but it's not going to tell you in advance what could be coming up. It's telling you more real time. So having something that's a little bit more predictive, like an MKTRedLine, is definitely helpful then, right?
Yeah, it is. The VIX is, in my opinion, even though I'm pretty old and I'm a bit old school, I think it's a bit outdated. and I'm slightly older than the VIX is, but not much. But it's much like any other indicator, really, like an average true range or any other volatility indicator or a stochastic, an oscillator. All they do is they tell you that the VIX, for example, that there's a volatility is low and it's going to pick up. That's really all that it means. We all know that because you can see it on the charts. You don't need the VIX. You can just look at the chart and say, well, it's not moving much. And then you can be guaranteed if you look at the VIX, it's going to tell you exactly the same thing. But it doesn't give you any advance warning of when it's going to start moving and what the magnitude of that move might be like. And I think MKT does both of those because it's a gauge. I mean, it's either very low or it's somewhere in the middle, or it goes really high. And when it goes into those extreme levels, you know that not only is the move imminent, but it's also going to be dramatic. And those are the two things you need to know. That's about it, really.
And with the risk index, you can actually get a accurate view, data-based opinion of what the volatility is, right?
Yeah, well, Lee, Lee knows more about the inner workings of MKT, but it's got to do with money flow and money supply and demand and how much is flowing where and the volume of that flow. Is that right, Lee?
That's right, yes. And so one of the things that both the MKT Risk Index and MKTRedLine gauge do for people is they can tell that this is happening in the background, even though you can't by looking at the charts. And you've just said on the VIX, you can probably see it on the charts, you can probably see it on the VIX. But there are things that are hidden that you can't see on the charts. And that's because MKT Risk Index and MKTRedLine, they work by looking deep into the data set, and they're looking for basically price moves without appropriate corresponding flows. What does that mean? It means shenanigans going on in the money flow that you can't see. And that's why it's so valuable.
Good Irish word. But, so the MKT looks at money. It looks at currency pairs, really, doesn't it? Money flowing. That's what the market's all about. So you're looking at the real core of everything, and that's where's the show me the money. Where's the money? Where's the money flowing? And it doesn't matter which market you're looking at. And we've looked at correlations between MKT and Bitcoin, various commodities. There's a few that you might like to mention, Lee. I can't remember them all, but
yeah,
there seems to be a correlation.
There is a good correlation. It's got like a 63% correlation with euro US dollar. It's got relationships with Bitcoin, Ethereum. It's got something to say about gold. It's got something to say about, we showed you the nat gas chart, and you're the world expert on nat gas. Commodities and commodity cycles there too.
What you should talk about, though, Lee, is natural gas. So I've got a big natural gas following on YouTube, and I've just taken a trade on natural gas. Now, I know that this trade probably is a little bit too early, not only because of what I've been looking at. I could be wrong. I might be spot on, but I think it might be a little early on the trade. That's okay. I've sort of accounted for that. But when I look at MKT, it seems to indicate to me that I might be right, that my hunch might be right, and that natural gas still has a little bit lower to go before we see the big rally. And super interesting how that lines up with what I'm seeing on the charts and the way the price is behaving, and also what seems to be coming out of the fundamentals with, interestingly, the weather and the number of gas rigs being taken down or put back up again. And it's all kind of correlated with MKT, which is super interesting. I think you did a correlation chart on that as well, with the nat gas price and MKT.
Yeah.
Yeah. And
I can't remember the numbers exactly, but there was a correlation. There was a correlation. And the thing is, when you do correlations mathematically say this is kind of like this, it goes up kind of like this. You've got two things going up. But the amazing thing about the nat gas is the actual shape you get. And you can see the shape, how it's all put together. And even though it may not have, an amazing correlation above 70% or anything, you can visually see that when the risk index goes up, you tend to see higher prices on nat gas. They tend to come down when the risk is falling, or in a series of falling steps, which is kind of what we're on at the moment. I mean, it is going down. And if the risk index is going down, we're likely to see, lower demand for nat gas. And so your trade might be a bit early, not to get too into it.
Yeah, so it's really interesting. So I expected that the price of nat gas, and I only brought that up because I know an awful lot of people are interested in nat gas. It's a commodity that people love to trade. It comes out of the sea, it comes out of the ground, it heats people's houses. Your gas bill's always incredibly high. Everyone's interested in natural gas, and it creates lots of trading opportunities. But when you look at it on the charts now, and I see it's really following what Redline's saying, it's coming down a little bit. Redline's showing that it's probably going to come down. It's not 100% correlated. There's a chance that it might rush up higher, just a small chance. Seems to be against what Redline is saying, MKT is saying. But I'm taking that trade right now, just in case that correlation goes off. But in general, I'm waiting for it to come lower down, and we'll see that on MKT as well.
So that's a lot of information we talked about today. So make sure you go to James's site, arcusfx.com. Check out what he's got. Once you subscribe, if you like this discussion, like it as well. And we really appreciate you all joining us, and we will see you again next time.